On a trade today. Currently I'm floating $2.5 million in a gold sell that I talked about yesterday. Yeah, I'm pretty sure I talked about it yesterday in yesterday's video. So we're gonna break down that trade today again because another play has played out again. So I'm gonna break that down, break down my entry as well. And yeah, we'll go from there. Look who I want to introduce you guys to. Look at this. I'm sorry, bro, I'm sorry. My boy Yagami. Look at my boy. His name is Yagami. I know. I'm gonna put him down. His heart racing. So, with that being said, let's get into the video. ICC Mafia, make sure you guys like and turn the fucking notifications on. Yo, I don't want to sound like a YouTuber because, well, I guess you can classify me as a YouTuber now, but turn your fucking notifications on. I shouldn't have to tell you like, oh, new video dropped. You should already be on that. Yeah, but with that being said, we have the Atlanta event tomorrow. The location's posted on my story, so go check that out. Come to the event tomorrow. Come to the trading class tomorrow. It's 100% free. All my events are free. Everything I do is for free. With that being said, enjoy the video. All right, and before we start, I just want to say that ICC is just a 3-step process on explaining what market structure and price action is. No, I didn't make some brand new concept or anything. ICC is just price action, market structure. I explain it in 3 easy steps: indication, correction, and continuation. Once again, all this can be done without that market structure. So with this being said, I hope you guys enjoy the video. If you have questions, put them in the comments down below, but most of the questions I probably might answer. If I don't say it, that means I don't use it. So if you ask it, I might not answer because I don't use it. And just don't overthink it, bro. The way that I'm explaining it to you, you just have to like take it in for what it is. I know you guys have probably watched so many other confusing videos or so many videos where they tell you that you need 8 confluences, but that's never the case, bro. So with that being said, I'm gonna break this down. Hope you enjoy. All right, boys. So basically, like I explained yesterday, so go watch yesterday's video. I was explaining how this level right here is where there are a bunch of buyers, right? So a bunch of buyers are sitting at this level. If this is the case, anything under this level would be considered bearish. Bearish until the point that it finds another level of buyers. Yesterday, we had price ended up breaking down, hitting this level, causing some small level of consolidation, small level of support. Then it broke down to the downside, which then caused a new low. So now we know that if price breaks this level of 4,012, we know it's going to go from 4,012 to 3,800 or 3,983, right? That is the case. So once it broke that level, it went from 3,983 all the way down to 3,892. With this being said, we know that sellers can push price from here to here. We know that buyers kick in from this level. So this will be our target if we're selling, right? So yesterday I explained how price was going to go on a correction and I was looking to hold the trade for more. Price, what did it do? It went on a correction. So basically a correction is when you're in a downtrend, but price ends up building structure back up, but it's not breaking any major levels. So it's really just correcting, grabbing liquidity of probably the late sellers, people that got in all the way down here, or people that are still trying to get in buys or whatever the case might be. This attracts buyers. This is going to attract a lot of liquidity. So a lot of people are going to be like, oh, the trend is changing. The trend is changing. But you just made a new low in the market. All this is just to influence buyers to get into the market just so they can get swiped out later on, right? So price, after making this new low, goes on this correction. Indication, correction. We have an indication that price under this level is going to go from here to here. So once it breaks here, this becomes our indication. The moment it stops being an indication is when it stops and it starts correcting. So we now know that price is going to go from here to here. That's the indication, from here to here. Price is indicating us that it's going to go from here to here, right? the correction happens. Corrections normally come after indications. That's what you're going to see. Prices grabbing liquidity, grabbing more money. Because essentially, when price is stopping here, this is saying, hey, there's more buyers than there are sellers, right? There are way more buyers here than there are sellers that are currently selling. So sellers have to pause what they're doing and become stronger by going back and grabbing as much liquidity as possible. So all this buying pressure is really just the sellers building up their momentum for the next push down. So the moment that buyers feel like they got one up on the sellers, so whenever the buyers feel like, yeah, we're above the sellers now. Also, make sure I said that right. Buyers are pushing up saying, oh, we have one up on the sellers now. We're way stronger. That is the moment everything changes. And sellers take back control of the markets, and normally, when price is done with the correction is because it goes back under the level that we've seen selling pressure before. But yet alone, we can go down to a smaller time frame and see that price ends up making a resistance level. Once it makes that resistance level, you can start to see that price starts to build lower highs and lower lows. So we have this highest point, price breaks it, lower high, lower low, lower high. As you can see, price is trying to push up here, but it fails to do so. So follow along on your chart if you can't see it. But as you can see, price is building lower highs and still rejecting to the upside, right? So all this is showing us that price is becoming bearish, and we're going to sell price under this level or even under this level because we know the recent reactions that happen from this level. All you need now is some volume. So you're going to turn on sessions, go here, Junior FX Addict. Where is my button? So now I got to go to settings, go to here, right here, titles, click this, turn this off, turn this off. As you can see, New York session will always give you the volume. Trade in New York session, everything's going to be perfectly fine. The indication, which is something we didn't trade. I traded this because I already knew what I was doing. I seen that price had already built some level of support and ended up breaking that level. So, I know you guys are going to be like, bro, but you sold on the indication. Yeah, I've been doing this for 5 years. This shit is easy. Trading is easy, bro. You're just overthinking it. So under this level, we've seen price go from here to down here. So when price does it again, we're looking for that same movement. Now, price is almost there. You can have the decision to close because you're right on the position of move. Now, if you're looking at me and talking about why I haven't closed, well, I'm looking at the higher time frame to go down more because if price, let's move this out the way. If price has a resistance level up here, so this is our highest point, it sells off, makes a low, corrects, makes a lower high. I'm looking for that brand new lower low. So whenever you're trading trends, you guys have to remember you're trading lower highs, lower lows, and higher highs and higher lows. So if you're trading a buy, let's say you get in, okay, you have the indication, the correction. Let's say you get in here, right? This is where your entries always come from the initial indication spot. Your trade entry should always come from that initial spot of an indication. So the moment it breaks back above or below that level, this is the only place your entry should be. The only place. Literally, I'm going to show you guys again, but my position, if you see most of my positions, go look, matter of fact, just go look at my Instagram highlights. If you see all of my positions, it comes from the initial indication spot. So that first breakout, that's where your entry is going to be once price comes back again for the continuation, the next leg up. So please do not enter too late, too early. The moment that price is back at that initial indication spot is the only time you should be entering. And your stop loss is supposed to go under the swing low or the swing high that was created before price pushed up to that level, right? So what that means, if we see here, the correction happened. Once the correction happened, notice price comes back under that level. Once price comes back under this level, my stop loss is going above the level that is being currently rejected, right? Currently being rejected. So this is going to be my stop loss level as price comes down here. Why am I going to do that? Why am I not scared that price might go up? Because we see the reaction that happens when price is under this level. So in our heads, we're always going to think, I'm just looking for price to do what it did before. Stop thinking like, oh, bro, what happens if it pulls back up? If it pulls back up, you took a loss. But nine times out of 10, price is going to make that same reaction if you're trading inside of the session. So when the money is moving, I traded in New York session. And as you can see, New York session push price. Soon as New York session open, look at this. I'm going to show you the difference, right? Buy, London, 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 right? New York session comes in. There's one candle coming down. Or there's one candle coming up, one candle coming back down, and then we got another candle coming back down. This is 10 o'clock. So we're 30 minutes into the session. And then look, price starts pushing down, pushing down, pushing down because you're trading with the volume. The volume, as long as you're on the right trend. So if you're looking at the right analysis, the right trend on the higher time frame, you see I'm on the 1 hour. I can go to the 4 hour. You're still going to see the same thing, right? You're still going to see that same thing, that same setup. So you can see here under this level, we had an indication, price corrected back to that level. And as you can see now, price is coming back down to create that new lower low. All this is done on the higher time frame. As long as you're right for the higher time frame analysis and looking at your swing highs and swing lows, I'm gonna turn this off and I'm gonna turn this back to green. I'm gonna turn this back to green so you can see it. As long as you are following what price is giving you, showing you, you are going to be okay. You just have to hold it through. Some of you guys be not trusting the process, close too early, close before you even get into the trade. I don't even know how that's possible, but you guys make that possible. You guys just be doing the most random stuff. Trade on the higher time frame. I promise you, you will I won't say you're going to be 100% profitable, but I will say you will come out on top every time or way more than you're used to. You'll come out with way more wins than you used to if you switch to the higher time frame and focus on the structure that is given. If price is building lower highs and lower lows and you're seeing it, that means price is on a downtrend. If price is building higher highs and higher lows, that means price is on an uptrend. So follow what yo gang. Follow what price is giving you. Stop thinking what you